Welcome back to the Bitcoin update. There has been a major development in the market that has led to this large red daily candle. You can see this big one here coming all the way from 27.1k all the way down to 25.5k. That is in one daily candle going down on Bitcoin roughly 5 to 6%, about 6% roughly, which is a big daily candle. We don't see daily candles that big that often. That's kind of an occurrence you see once every couple of weeks. And the reason why we saw such a dramatic move downwards, and not only was it just, a downwards price action move, it was also a big drop below things like the 200-week SMA, below things like the bull market support band. Now, it's not confirmed that we've lost those things. They haven't closed below it yet. And we've still got major support as per the descending wedge, but dropping below the 200-week SMA, even in a wick is not really excellent. Of course it's not excellent. Now, we could very well come back and close above it. We'll speak about that in a second, but it's not what we would really want to see on Bitcoin. So we've come down quite a bit in one daily candle, a swift move to the downside. If we look at something like the 15-minute chart, you can just see how quickly this happened. This is all within roughly 45 minutes to 60 minutes. Why did this happen? Why did this big drop occur? It wasn't really in the charts. It wasn't a charting formation that predicted a drop like this. In fact, the charting formations were relatively bullish. We had this kind of descending, broadening wedge formation, which is generally a bullish structure, and that was meant to break to the upside. Now, the reason it broke to the downside is because the SEC is suing Binance and suing CZ, the owner of Binance, right? So that's big, big stuff. They're also declaring, right? The SEC is also declaring, right, that a bunch of altcoins are securities, okay? So this is all bad news, okay? And this has all come out recently, just yesterday, and it led to a big drop. That's the cause of a drop. Now, if we want to look at a charting cause for a drop, so that's the fundamental cause of a drop. The charting cause for the drop could be seen as the bearish monthly candle close we had. Okay, we had a monthly candle close below the 21 EMA after rejecting from this red resistance line at around 29.5k. That's not good stuff, of course, and that's an evening star candlestick formation with a bearish engulfing candle. So the monthly chart wasn't looking particularly strong. But, we've discussed the monthly chart quite a bit. I'm pretty sure you guys are aware of that right now. That wasn't looking very good. So that's probably the charting, the charting kind of explanation for the drop here. But even with this drop and even with this big, bad news coming in fundamentally, the bullish structure still remains. We're still in the descending wedge formation. We've actually come down during this drop, and on two separate daily candles now, yesterday's candle and today's candle, we've managed to hold this wedge for support. So as of right now, even though we've seen a big drop, even though we saw a 6% dump to the downside, and that's obviously not good, and it's obviously, stirred up a lot of bearishness in the market, still, even in wake of this, we are holding that wedge, just barely holding on to it, even with losing something like the 200-week SMA and the bull market support band, just major indicators that really should be held. And again, they're not broken yet because we haven't seen the weekly candle close, and wicks don't count. We've seen wicks before on multiple occasions, but it's just still not ideal. Even though we've done all of that, we're still kind of grasping onto this wedge, holding the line there, and that's something that's necessary to hold. Now, I'm going to get into a chart here, but I think you guys are going to find very interesting, and it is the weekly chart, okay? I think Bitcoin, even though we haven't dropped this wedge yet, okay, and even though there's no real indication that we will drop the wedge at this point in time yet, since it is still holding, it is still a bullish structure, and there is still fundamentally a lot of support, such as, the Gaussian channel, which is the center line of the Gaussian channel over here, which is very, very strong. On the weekly chart, we generally don't really lose that very easily, and, when we do move through the Gaussian, right, we move through it properly. When we move from the upside, we go through to the downside. We move from the downside, we go through to the upside. This is something that's happened on every single occasion on Bitcoin. We have entered the Gaussian from the downside. If we're taking any historical data into account here, since 2013, we've entered it from downside. We should be moving through it to the upside. So the macro is not bearish yet. We haven't really lost anything that's important yet in the macro. As I said, we're currently below the 200-week SMA, but we haven't lost it yet. We haven't actually closed below it. If we do close below it, that's bad news. We've got 5 days there, 5 days to kind of recover some of the losses we've seen in the last 24 to 36 hours, but as of right now, that's not really confirmed yet, and we're still holding that wedge there. As for the daily chart, there are a few things that are looking okay. We've got, we had a bearish cross on the stochastic RSI, on the MACD, sorry, that's not very good, but the MACD is also forming a positive divergence. We've also got the RSI about to test a pretty major support zone, which lines up well with the bottom of the channel itself, so of the wedge, sorry. So if we move down to the bottom of the wedge, we'll be moving down to this RSI support, so that's a bounce zone there, and we've also got positive divergence on stochastic RSI. RSI, so that's good as well. So, lots of things are saying that, this wedge could actually hold for support, including something like the 15-minute chart. We have a pink descending wedge formation. This is a short-term formation, of course, but it is still a descending wedge formation. Descending wedges generally do break to the upside, so that's good news as well. So, lots of reason to believe this wedge could very well hold, unless we see another fundamental development in that case, in that kind of circumstance in which the SEC is suing Binance. Unless we see a development there, we should be able to hold this wedge, in my opinion. Now, on the occurrence that we don't hold the wedge, okay, it's possible we don't hold the wedge. And I've discussed this before. I believe that 24.3k is the major support zone we should be looking at. If we lose that, we re-enter this range. We re-enter this big range that we saw since June or May 2022. That's not what we want to do. If we re-enter that range, that's when Bitcoin's actually getting in danger. So 24.3k is the main level. And 24.3k is identified on the weekly chart. You can see the 2 weekly candle closes we saw just at that level then. Okay, so if we drop below on the weekly chart at 24.3k or below, that's bad news. But ultimately, okay, if we want to talk about a bear case, because people are going to want to hear about what the bear case is, we can talk about a bear case. What is the bear case? I believe the bear case is that we're copying 2018 or 2019. Okay, and I'll tell you why. And even in this bear case, okay, I don't believe we'll see new lows. Here's my explanation, okay, and this is going to make sense in a second. Just hear me out. In 2019, 2018, we saw, let me actually draw off a trend line, a horizontal resistance zone. Okay, it stemmed back from the bull market, but fundamentally it is the resistance zone that marked the top of the range, the top of this circular bear market range. We did a very similar circular bear market range over here. Okay, we had this cupped bottom. Okay, so we see that that pink line there in 2018 could be basically the same thing as what we saw as the top of the range as this pink line over here, okay, in 2022, 2021. So what did we see? We saw in 2018, all right, and 2019, a drop below that pink line, a rounding bottom, and then we got back above that line and we pulsed to the upside. We then had, okay, a bearish weekly chart MACD cross. And I'll show you this in a second. Let me clear up my charts here. We had a bearish weekly chart MACD cross. As you can see on the screen here, a bearish weekly chart MACD cross after the impulse to the upside above the pink line. That bearish MACD cross took us on a downwards trend. Okay, that downwards trend lasted from around July 2019 all the way through to March 2020, but fundamentally, it actually lasted from July 2019 to November 2019 because COVID doesn't count, okay? COVID is a black swan event. We can kind of cross that out and say it did happen, and we actually started going up from there. So realistically, that downwards trend lasted from July to November, which is 4 months of downwards trend. So let me explain what happened. We went downwards, okay? Let me clear this up so I can show it to you 1 second. We went downwards below the pink resistance line. Okay, that was the top of the range. We formed a cup formation, all right, a cup formation bottom, all right. We impulsed to the upside. We saw a bearish MACD cross and we went downwards for 4 months, okay? That is very similar to what we're seeing right now. Or at least it could be, all right? So we had, again, in this time around, we dropped below the pink line, okay? We had a cupped bottom formation, cup over here, bottom formation. We impulsed to the upside above the pink line. We are seeing a bearish MACD cross, and if it's anything like in 2019, we could be seeing around 4 months of correction. That 4 months of correction could take us anywhere down here, okay? Now, it's just speculation. Obviously, it's not based on that much data. It's very, very speculative. But, I think I've discussed before in this channel many, many times that, there are similarities for sure between, 2019, 2018 bottom and this bottom we saw over here in 2022. There are definitely similarities that we've pointed out in the past. You could even argue the pink line actually was down here in 2022, and that would make the rounding bottom a bit more similar, because even in back here in 2018, that pink line was actually formed during the bear market, and that would mean this line was formed during the bear market as well. The point I'm trying to make is that there are similarities between 2018, 2019, and 2021, 2022, and so we could be seeing a similar bear market in which we see now a few months of downwards trending that ultimately reaches, not quite the lows, but, somewhere in that 20k region, and then as the halving occurs, we start to see upwards again. So that could be a scenario for a boring bear market, and that could be a bear case for sure, especially considering what's happened on the monthly chart, the bearishness on the monthly chart, that would make sense, and especially what's happening with the bearishness on the weekly chart forming with that bearish MACD cross. But still fundamentally, even in wake of all of this stuff, as I've said before, we're still in the bullish wedge formation, we're still holding it quite strongly, and as of right now, we've still got actually a bullish candle forming here with a long wick to the downside and a small candle body. That's a reversal pattern, and on the short-term charts, we're seeing this descending wedge formation play out. We still have not seen a close below things like the bull market support band. We have not seen a close below things like the 200-week SMA. So it's too early to confirm, anything in regards to this drop being actually concrete yet. Total cryptocurrency market cap is still in the same descending wedge formation, again with the same bullish candlestick formation forming. All right, and we've also got this major support zone at around 1 trillion, which we've bounced off of, as well as the bottom of this wedge. So realistically, we're still on support for Bitcoin. Yes, the price has dropped far, and yes, that has caused a lot of panic, but really it's not really confirmed anything yet. Gold is on the way upwards. It is broken above its pink downtrending line. It's bouncing off its yellow support line. That's good to see. Ultimately, nothing really concrete has occurred yet. But even if we did see a bearish scenario, I do not believe it would take us to new lows. But ultimately, guys, 24.3k is the level you should be watching, and I'll update you if anything happens in regards to this descending wedge. As I said yesterday and the day before that, we do have FOMC in around 7 or 8 days, and we do have CPI at the same time. So FOMC and CPI at the same day, it's 7 or 8 days from now, and so that will lead to volatility. That's the real thing we need to be looking at when that occurs, because that will lead to volatility that will no doubt drag us either up out of the wedge or down below the wedge, and that's really where the volatility is going to come in. I think this volatility was unexpected. Not many people expected that to happen, of course. If people expected it to happen, it wouldn't have dropped that quickly, right? That's what you call a black swan event. Now, black swan events don't necessarily need to drag Bitcoin downwards 40% like COVID did, but the definition of black swan event is something that was unexpected, that was bad. That's a black swan event that occurred yesterday, and obviously it didn't have massive implications to the price, but it was sizable. So, just keep an eye on the charts for now, and I'll certainly be updating you guys if something happens. As of right now, even as I speak, Bitcoin's impulsing to the upside, seeing a nice and strong bounce out of that descending channel formation. So it's great to see that channel formation has broke to the upside. We discussed that at the start of this video, how it would, and it's played out in real time. Actually, I'm actually a bit upset because I was going to trade that, but instead I'm making the video. So look, it is what it is. At least I informed you guys of it. So without further ado, let's end the video there. Guys, check out the VIP group, and you can get access to altcoin trading signals on Telegram. During this black swan event, during this downwards price action, we had 3 trade signals activate, pulling a cumulative, I can't say that word, profit of around, I believe, 200% on 10x leverage. I can't quite recall, but all of which reached their targets within around 2 hours, which was great to see. So massive profits there on the VIP group. You can get part of that. All the payment information, details, and the group information and group results are in the description below in the Telegram group. We've also got Bitget Exchange, guys. Sign up using my referral link for a 15% trading fee discount. This is the exchange I personally use for trading. I'm a career trader. I trade every single day, and this is the exchange that I use. Lowest fees in the game, non-KYC, or optional KYC, I should say. And again, sign up using my referral link for a 15% trading fee discount for life. That is what you should do if you're interested in getting a great exchange, especially with all the stuff going on with Binance recently. We've also got Crypto Academy. If you want to learn how to trade, this is the place to do it. The Become a Trader 10-unit course will teach you everything you need to know about trading. You can read the description of the course on the website, and you can throw us an email. The email address is also on the website, and through that email address, you'll receive a document back with all the information of the course, the payment details, and also a video walkthrough of what the course looks like, so you can make a fully informed decision before purchasing. Thank you guys for watching. I hope you enjoyed it, and I'll catch you in the next one.